Jubilant Life Sciences Limited Q4 and FY20 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on the touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vineet Mayer, Head of Investor Relations, Jubilant Life Sciences Limited. Thank you, and over to you, sir.
Thank you. Good evening, everybody. I'm Vineet Mayer from Investor Relations at Jubilant Life Sciences. I thank you for being with us today on our Q4 and 12-month FY20 earnings conference call. I would like to remind you that some of the statements made on the call today could be forward-looking in nature, and a detailed disclaimer in this regard has been included in the press release that has been shared on our website. On the call today, we have Mr. Shyam S. Bhartia, Chairman, Mr. Hari S. Bhartia, Co-Chairman and Managing Director, Mr. Pramod Yadav, CEO, Jubilant Pharma, Mr. Rajesh Srivastava, CEO, Life Science Ingredients, and Mr. Alok Vash, President and CFO, Jubilant Life Sciences Limited. I now invite Mr. Shyam Bhartia to share his comments.
Thank you, Vineet. Good evening to everyone. I am sure you would have had a chance to go through our presentation and press release, which we have shared with you. We are glad to report record profits in FY20 with improvements in margins resulting from strong performance in the pharmaceutical and drug discovery and development solution segments. Pharmaceutical segment delivered 27.2% EBITDA margin, and DDS segment saw EBITDA margin increase to 28.1% from 8.3% margin in Q4 FY19. The LSI segment's FY22 revenue was at 3,179 crores as against 3,545 crores last year. Strong growth in specialty intermediates and nutritional product businesses led to margin improvement by 100 basis points to 13.6%. I am pleased also to highlight that during the year, the company reduced its net debt by rupees 514 crores and is focused on further deleveraging by generating healthy levels of cash flows. Further details on debt and other key financials will be provided by Alok in his remarks. I would also like to discuss the impact of COVID-19 pandemic on our business. I am pleased to report that despite the tough COVID-19 situation, we have made all efforts to operate all our facilities with safety of our people and plants. Demand conditions across most of our businesses continue to remain stable. We have been able to continue to operate almost all our facilities in North America and India. Our Nanjangud facility, which had temporarily suspended operations, has also received regulatory approvals to restart. Pramod will provide you more details on this in his remarks. We have ensured adequate stocks of all the raw materials in our businesses, along with security of future supplies, and have not witnessed any significant variations in the availability and the purchase price of key raw materials. We have also been able to overcome the logistics-related challenges thanks by our manufacturing and supply chain teams. We are conducting a stringent review of our overall cost structure to reduce both fixed and variable costs. We are also rationalizing our capex plans without sacrificing growth until the business environment stabilizes. Across our operations, since the onset of COVID-19, our paramount focus has been the safety and well-being of our employees and their families, business partners, and local communities. At workplace, we are following necessary guidelines of sanitation, social distancing, and emergency preparedness to deal with any eventuality related to COVID-19. In response to COVID-19 pandemic, we have also started production of hand sanitizers in our plants in quantities to various government and regulatory and healthcare facilities. We have also contributed rupees 5 crores to PM CARES Fund to support the Government of India's initiative in mitigating COVID-19 crisis. This includes 1 day's gross salary of about 5,300 employees. As announced recently, regarding our licensing agreement with US-based Gilead Sciences to register, manufacture and sell Gilead investigational drug remdesivir, a potential therapy for COVID-19. We are working towards initiating production of the drug by July 2020, subject to all regulatory approvals. I am confident that, notwithstanding the current challenges unleashed by COVID-19 pandemic, we'll be able to deliver sustained growth given our leadership position in all our businesses and presence in niche and highly potential specialty pharmaceuticals, CMO, specialty ingredients, nutrition, and drug discovery businesses. I also like to take this opportunity to thank all our employees who have worked tirelessly across all our plants and offices to ensure continuity in operation. With this, I would like to request Pramod to discuss the pharma business.
Thank you, Mr. Bhatia. A very good evening to all of you. I would like to share overview of pharmaceutical business performance during the quarter. During Q4FY20, pharmaceutical segment revenue was up 6% year-on-year, driven by a 13% year-on-year increase in specialty pharmaceuticals and 17% growth in the generic businesses. The growth in specialty pharmaceuticals during the quarter was led by a strong performance in the radiopharma business, a result of higher volume in key products including Jubilant. We are also working on our unique pipeline of around 8 products currently under development with an addressable market of over $300 million. We are confident that strategic alignment of our radio pharmaceutical business with the radio pharmacy business position us strongly to capitalize on current market demand. We are taking several steps, including opening up of new pharmacies, acquiring new customers, and increasing operational efficiencies to drive growth in top line and improvement in profitability in the distribution business. The allergy therapy product business also reported revenue growth during the quarter, led by better prices. CDMO business Q4 FY20 revenue was rupees 388 crore versus rupees 447 crore in Q4 FY19 due to lower revenues in API, which was partially compensated by higher sales in CMO businesses. API business revenue decline during the quarter was due to lower dispatches from the plant on account of COVID-19 situation at site and additional quality checks on all input raw materials to meet enhanced regulatory requirements. The generic revenue growth in Q4 FY20 was driven by healthier performance in the US market, which witnessed higher volumes and better prices. The EBITDA of pharmaceutical business segment was up 50% year-on-year to rupees 429 crore from rupees 285 crore in Q4 FY19. Apart from higher revenue and better margins, the quarter also benefited from better comparison from Q4 FY19 since the quarter had significant litigation costs and failure to supply penalties. With regard to COVID-19 situation, I would like to mention that it's business as usual on the operational front. All our plants in North America are operating normally. We continue to witness a stable demand across CDMO and the generic segments. The only COVID impact we have witnessed is in the specialty pharma segment, which has been impacted by fewer hospital visitations. However, with the lifting of lockdown in North America, we have witnessed business recovering to about 70% of normal sales last week from a low of 40 to 50% of normal sales in early April. We expect normalization of sales in specialty pharmaceutical business in Q2 FY21. I would now like to provide an update on API Nanjangud plant. In last week of March 2020, operations at our Nanjangud plant were temporarily suspended due to positive testing of few employees at the plant for COVID-19. The company has provided full support to district administration and health authorities, including ensuring quarantine of all employees and importantly following government protocols. We are pleased to report that all the employees have also fully recovered and ready to get back to the work. We have assigned utmost importance to the well-being and safety of our employees and the nearby community and have distributed masks, soaps, sanitizers and rations to support fight against COVID-19. We have now received the permission to restart the plant and expect the production to start in the next few days after following all the protocols. We expect to partially mitigate the impact of temporary suspension of operations at the API plant through the existing finished good inventory at sites and by increasing production of few high-demand products where we have additional capacities available. With regard to regulatory matters, the site remediation activities at Roorkee in consultation with third-party consultants to address US FDA observations are progressing well, and we are hopeful of the resolution of the same once COVID-19 related the disruption subsides. The Nanjangud plant during the quarter was assigned GMP compliance status by Health Canada. We are working diligently with the US FDA regarding resolution of OAI status in the Nanjangud and are hopeful of a resolution of same as well. We continue to maximize our capabilities to remain competitive and meet the needs of our customers as we continue to invest in operational improvements. We are committed to doing our part to make available treatment for COVID and feel a profound responsibility to help improve the health of the people around the world. We are well positioned through our combination of scientific expertise, operational skill and financial strength to bring together our resources in collaboration with others to accelerate the fight against this pandemic. With this, I would like to turn over today's discussion to Rajesh for providing insight into LSI and DDDS businesses.
Thank you, Pramod. A very good evening to all of you. I would like to share details on Life Science Ingredients and Drug Discovery and Development Solutions segments performance during the quarter. LSI segment's Q4 FY20 revenue was at rupees 823 crore compared to rupees 912 crores in Q4 FY19. This was due to lower revenue in the specialty intermediate and life science chemical businesses. Our nutrition business reported robust revenue growth of 50% year-on-year during the quarter, led by higher volume and better price in our vitamin D3. We expect pricing scenario to improve further in Q1 FY21. Specialty intermediates revenue was impacted by subdued demand of pyridine and its derivatives, resulting from weak demand in crop protection products due to COVID-19 impact in China. Life science chemical business revenue was impacted due to subdued demand of ethyl acetate, resulting from lower demand in segments like automotive, paint, consumer durables, packaging, and electronic industries. Revenue in LST business also impacted due to continued decline in pricing, resultant to lower demand and significant price reduction in our key raw material, that is acetic acid. EBITDA during the quarter was at rupees 118 crore, up 17% year-on-year and 18% quarter-on-quarter, led by margin improvement in specialty intermediate and nutritional products businesses. EBITDA margin was at 14.4%, up from 11% in Q4 FY19 and 12.6% in Q3 FY20. I would like to mention that demand in our nutritional business as well as specialty intermediate business continues to be strong, both domestically and internationally. All our customers globally are buying the products at pre-COVID levels. We are also realizing better pricing than that during the last quarter. In life science chemical business, we are witnessing stability in demand and prices of acetic acid and expect demand to improve going forward. About 70% of our revenue in LSI segment is from pharmaceutical, agrochemical, nutritional products and other essential material industries. And hence, we expect our performance at pre-COVID levels. I am happy to announce that our R&D team has developed formulation for hand sanitizer using own-produced ethanol. The company has got necessary approvals from government authorities and has realigned its manufacturing facility to start producing hand sanitizers. We have supplied these sanitizers free of cost to national and state governments to support their efforts against COVID-19. To meet the strong demand in the market for good quality sanitizers, we have started producing sanitizers at commercial scale. Our drug discovery and development solution business witnessed robust growth during fourth quarter due to strong demand witnessed from integrated services and for chemistry and scale-up opportunities by the drug discovery services business. Q4FY20 revenue of the segment increased by 25% year-on-year and EBITDA increased to rupees 35 crore from a loss of rupees 1 crore in Q4FY19. In view of the strong demand in this segment, as we have discussed in our Q3FY20 earning call, we are making investments in this business to double the capacities in the next 2 to 3 years. In drug discovery, both chemistry and biology, business has shown strong momentum and experienced only minimal impact from COVID-19, with no delays or cancellation to existing programs. All signed projects continue to be on track. COVID-19 is offering some new and important opportunities which we are reviewing. In our innovative therapeutics business, we are working on more than 6 programs to deliver precision medicines focused on both first-in-class and validated but difficult to drug novel targets to address unmet medical needs in the area of oncology and autoimmune disorders, with potential to fast-track promising assets from discovery to clinical assets. On the operation front, we are implementing capex reduction actions while ensuring that we run operational safety and are compliant with various regulations. Our focus is to maximize utilization of our existing assets at optimum level through minor debottlenecking wherever required to meet growing customer demand. We have significantly reduced our planned capex in FY21 without affecting the revenue plan as per expected demand of our products. In our life science chemical business, which is more susceptible to commodity prices, we have taken action to immediately revise our minimum inventory level of raw materials as well as finished products. We are closely working with the customers to keep control on our account receivables. A very high level of rigor is being followed to conserve cash and also ensuring that we meet all our customers' demand. Taking into account the present market demand scenario, we expect to generate even stronger cash in business with tighter control on working capital, specifically in life science chemical business, and lower capex investment. With that, I will pass this discussion on to Alok.
Thank you, Rajesh. A very good evening, and I thank everyone for taking out time and joining us on our quarterly earnings conference call. I would like to highlight the company's financial performance during 12 months and the quarter ended March 31, 2020. Revenue from operations during the quarter at rupees 2,391 crores was in line with last year's corresponding quarter, with pharma revenues higher by 6% year over year to rupees 1,483 crores. LSI revenues at rupees 823 crores versus rupees 912 crores during quarter 4 fiscal 19. And drug discoveries revenue higher by 25% to rupees 85 crore. Reported EBITDA at rupees 556 crore was up by 58% year over year and 8% quarter on quarter, with margin at 23.3%, which was higher by 852 basis points
year-over-year and 107 basis points quarter-on-quarter. Depreciation and amortization expense during the quarter was at rupees 129 crores, higher by 36% year-over-year and higher by 14% quarter-on-quarter. Increase in depreciation cost was largely due to adoption of new lease accounting standards. Finance cost during the quarter was at rupees 71 crores, higher by 16% year-over-year and higher by 1% quarter-on-quarter. Average blended interest rate for 12-month fiscal 20 was at 6.1%. Rupee loans were at 8.2% and foreign currency loans were at 5.3%. Profit after tax during the quarter was at rupees 260 crores as compared with a loss of rupees 99 crores in Q4 fiscal 19 with an EPS of rupees 16.35 per share. Q4 fiscal 19 had an IFC stock settlement charge of rupees 235 crores classified as an exceptional item. Normalized profit after tax during the quarter was at rupees 260 crores as against rupees 135 crores in Q4 fiscal 19. Normalized EPS during the quarter was at rupees 16.35 per share versus rupees 8.50 in Q4 fiscal 19. For fiscal 20 financials, the key highlights are the revenue achievement of rupees 9,154 crores, marginally up from fiscal 19. EBITDA of rupees 1,995 crores, up 12% from fiscal 19. Profit after tax of rupees 898 crores, which is up 56% from fiscal 19. An EPS of rupees 56.39 rupees, up 53% from fiscal 19 EPS of 36.86 rupees. For rest of the details about fiscal 20, please refer to our investor presentation and press release shared with you. The company's net debt on a constant currency basis was at rupees 2,976 crores, a reduction of rupees 514 crores as compared to March 31, 2019. At the end of fiscal 20, our net debt to fiscal 20 EBITDA has improved to 1.6 times from 2.0x at end of fiscal 19. We have improved our cash position further during the current quarter and expect to generate healthy operating cash flows during the year to further reduce our debt levels. I would also like to mention that given a strong liquidity position and normal operations, we have not requested any deferment of loan and interest payments, and we will continue to service all our debt obligations on time. The capex was at 89 crores in Q4 fiscal 20 and rupees 516 crores in fiscal 20. During the year, the company has generated operating cash of rupees 1,290 crores before capex and product development of rupees 624 crores. During the quarter, the company paid an interim dividend at rupees 5 per share of 1 rupees paid up for fiscal 20, which is also the final dividend for the year as well. Despite the challenges posed by COVID-19, we have been able to deliver strong performance. We will continue to strengthen our leadership position in all our businesses and create value for our shareholders. Before I conclude, I would also like to provide an update on our reorganization proposal. After filing the composite scheme of arrangement with the BSE and NSE stock exchanges, we have received no objection letters from both the exchanges in January 2020. Post this, the company had filed application for approval of the composite scheme of arrangement with NCLT Allahabad branch. Given the lockdown situation, we expect some delay in the process timelines and expect completion of this process by October or November 2020. With this, I would like to conclude our opening remarks. We will now be happy to address any questions that you may have.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question, please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rahul Veera from Abacus. Please go ahead.
Hi, sir. I was just trying to understand the interest cost. So on an annualized basis, from like 219 crores last year, we paid 287 crores this year. And that too when we are reducing the debt by close to 500 crores. Can you throw some light there, sir?
So we also have the lease accounting standards, which requires us to capture that the interest cost because of the lease expenses. That is also coming in here, adding to the difference.
Okay. And how much would that be, sir, approximately?
I would not have that number offhand. I'll just come back to you on this.
Sure. No problem, sir. Sir, and one more question for Pramod, sir. Sir, on the drug discovery side, last year, same quarter, when we did 68 crores of revenue, our EBITDA margin was slightly negative. But at 85 crores, we have an EBITDA of 40 crores. So what changed in the drug discovery segment?
So one.
Sorry to interrupt,
So
Mr.
this will
Veera.
be answered by Rajesh. I think Rajesh, you are mute.
I'm okay. Can you hear?
Yeah.
Yes, sir.
Yeah. So this is Rajesh Srivastava. Basically, there are two reasons. There is too much noise on the back. So mainly because of pricing. We have improved our pricing of the FTEs of research, and secondly, our capacity utilization has gone up. We have improved our capacity utilization, and of course, there is some positive impact of exchange rate as well. So these are the three key reasons.
Fair point. I'll come back in the queue, sir. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, please press star and 1. The next question is from the line of Cindy from Value Partners. Please go ahead.
Hi, management. Thanks for the call. So my question will be mainly on the Jubilant Pharma side. So for the pharma segment, how much capex we are expecting for fiscal 2021? This is my first question. Thank you.
So the capex for FY 2021, post this COVID scenario, we are kind of, as of now, controlling to conserve the cash. And we are continuing to watch the situation and take the decision based on that. But however, it will be somewhere plus minus of the $50 million or the $60 million, but we haven't taken. But we are watching the situation.
Sorry, we have around 60 million capex we're expecting this year for pharmaceutical segment.
No, so as I said that we are watching the situation, and as of now, we need to conserve the cash. So anything which can be avoided without impacting safety or the compliance, we are bit holding that.
Okay, got you. So for the debt, could you please give the breakdown on the Jubilant Pharma side, like for the debt level and the cash level?
So we have bonds of about $400 million, and we have a small working capital facility of about $30 million as of March 31, 2019. On the cash side, we have about $7.5 million there. 75 million there. So net is about 2,200 crores of cash that we have, which is roughly about $300 million of net debt.
Okay, thank you. I have another question about on our rating upgrade by the S&P and Fitch. Like any comment from like any any update from their side?
We didn't get your question clearly, please. Can you repeat?
Yeah, I mean like from the international rating agency, the rating upgrade. So any like process, like kind of any progress on this side from the rating agencies?
There is no change in rating, I think, on our.
Yeah, so rating agencies obviously have put us on a positive watch for the pharma business. Basically, they're waiting for the demerger to happen, which when that will probably happen sometime in October and November, then the rating agencies will come up with the final rating.
Okay, got you. So I have one more, like for the pharmaceutical side, like for the first quarter, fiscal 2021. Do we have what's our estimated impact on the revenue?
Sorry, could you repeat the question, please?
Like the first quarter 2021, the impact on the pharmaceutical side revenue.
So then, as you see, we have been growing on our top line, and in FY20 we have delivered the strong performance. We had expected this performance to even improve more in FY21. However, we do have the COVID-19 situation as of now, which is evolving almost on the daily basis. So at this point of time, it will be slightly difficult to project, but the way we are seeing the demand in the market, we are very confident that we will be able to deliver the stable performance.
Any expectation that for your this year's like the revenue growth?
So we don't give out.
Otherwise,
So go ahead, Tom.
yeah. No.
Okay.
No, I would say we don't give out those guidance for our financials. But as we said earlier, obviously Q1 we will have some COVID impact, but for the full year we believe we should be able to come back from the COVID impact and not have a significant impact on our financials.
Okay. I don't have further questions. Thank you so much.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, we request you to limit your questions to 2 per participant only. The next question is from the line of Rakesh Jhunjhunwala from Rare Enterprises. Please go ahead.
Good evening and congratulations on a fine performance. I have only two questions. Sir, with your agency in which you have created this conference call, you're making us hold the phone for 20 minutes. You please search a better agency. I was holding the line for 20 minutes in order to join the call.
Sorry, Rakesh. I'm sorry.
You please search a better agency. And second thing, sir, is that in the 56 rupees earning, your payout ratio is 8%.
Yes, please.
I mean, on what basis has the board made a dividend policy? On what basis are you declaring your dividend?
You see, we are trying to conserve cash because of the COVID situation, and we are going through a demerger also.
So that's fact, but has your board come? Do you have a defined dividend policy? I mean, 10% payout is ridiculous.
We have to repay the debts also. Considering that we have to repay the debt, and we have a high debt of almost 2 times of the EBITDA, so you will see that we are able to reduce our debt. So overall, it will really help the investors in reducing debt.
And another thing is, why are you holding such large amounts of cash? Over 12 crores cash, no?
No, we have cash.
No, one
This
second.
cash we use it for normally for repayment of the debt.
No, but you have 1,259 crores of cash, and then, I mean, it's a large amount, no?
So the main cash is in US,
Right.
which we will use it for repayment of our bonds as and when they are due next year.
Okay. Thank you, and congratulations on a fine performance.
Thank you, Rakesh ji.
Thank you.
Thank you. The next question from the line of Hitakshi Chandrani from Motilal Oswal. Please go ahead.
Hello, sir. Congratulations and thank you for being on the call. My first question is the margins that you have for the drug discovery business this time. You said it's because of the three reasons, but how far are these margins sustainable going forward?
Yeah. So, in fact, going forward, our capacity, as I said in my speech, that our demand remains strong, and we are in a position to continue to utilize capacity as not only as per last year. In fact, we are planning to debottleneck capacity, and we are trying to improve going forward. So, I definitely see that the demand continues. We are utilizing higher capacity. Our pricing of our FTEs is also stronger. So I don't see any reason that this will not continue. In fact, it should improve any further if possible.
Okay, that helps. And my other question is, I think there has been an increase in gross debt by 600 crores. So is there any specific reason for it that you would like to point out?
As I said, that we have cash, and the cash in US, and we are holding the cash for our repayment of our debentures.
And also there has been a restatement of the debt due to the foreign currency translation. So in the previous year, that exchange rate was about 69 rupees, which has now gone up to 75. So that translation also increases the gross amount of debt.
Okay, that helps. Thank you so much. That's it from my end.
Sure.
Thank you. A reminder to the participants, anyone wishing to ask a question, please press star 1. The next question is in the line of Sajal Kapoor, an individual investor. Please go ahead.
Oh, hi. Thanks for the opportunity. So I've got two questions. First one is on your drug discovery services business, where you're doubling investments to around 400 crores, which is good news, of course. Just wanted to better understand the nature of these investments. Is that going into new capabilities or additional lab space or purely human capital? I mean, are we looking to add new growth, high growth areas like cell and gene therapy as part of this capex? What exactly are we planning?
I'll explain you. Firstly, we are not investing 400 crores. We are investing.
No, taking it to 400. So we are doubling, right? So we are currently about 200. We'll take it to 400.
In 2 to 3 years' time, not immediately.
Yes, correct.
So immediately we are adding more lab space to take care of the additional requirement. As you see that from a lot of business is increasing towards India from other countries. So we see a lot of business coming in, and we see a lot of inquiries. In order to meet the requirement of our customers, we are increasing the lab space and also the people. That will bring in more.
Yeah. In terms of capability, if you could just add some more color. I mean, what exactly are our customers? I know we mainly deal with big pharma. Or are we into dealing with a small biopharma, the virtual ones as well? So are we looking at, because cell and gene therapy is the new thing on the horizon. Is that one area we are looking at, or definitely?
We are evaluating cell and gene therapy, but we are not entering as yet. We have not entered as yet. But we are dealing with big pharma also and medium-sized biotech pharma.
So more and more it is on integrated drug discovery as well as medicinal chemistry right now. And we are not adding on cell and gene therapy.
Okay, understood. So thank you for that. Second question I have is, US, and we have an on-ground presence. We are on the US soil, and significant part of our assets are there. But US currently has a high dependency on India and China for its pharma supply chain. So how feasible you think it is to move the entire supply chain back to the US soil, because that's what they are hinting at. That's one. And two, will the gestation period and the economic support such a threat, or is it just purely an election rhetoric?
No, I think, let me tell you one thing, that like we are also present in dosage form in US also and in India also. We continue to increase our presence in US in our dosage form for US business, and also from India also we continue to increase our business. So it is both the combination of US business and India business. US business is also growing at the same time. From India also exports to US and to Europe is growing.
No, correct. My question, sir, was more on the industry perspective. So do you think it is feasible to move the entire supply chain? Because that's what these politicians are talking about. I mean, is it economically viable?
No, it's not feasible in the entire. But of course, since we are present in both India and US both in dosage forms. So for us, it is good that we are also growing in US and India. But it cannot be 100% cannot be transferred. There will always be a big focus there in US. So when there is a focus in US, we are also concentrating in our increasing capacities in US also.
Right. And are we still guiding for around about 500 crore of capex for foreseeable future, or what's the sort of trajectory looking like?
No, the capex, as we said, that we are trying to reduce capex this year, so which has a long-term investment, which have only for debottlenecking and some small capexes for safety and regulatory reasons. So capex this year we hope to reduce substantially.
Okay, which means that we should be at a much lower net debt end of the fiscal.
That's right. So as we have said also that we hope to reduce net debt at the end of the year.
Sure. Thank you so much and all the very best.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, please press star and 1. The next question is on the line of Pratik Mandhana from Nomura. Please go ahead.
Hello. Hello.
Yeah.
Yeah. Hello.
Yeah. Just one second. Can you hear me, sir?
Sir, your voice is breaking up.
Yeah. Thank you for taking my question. So I had a couple of questions. So first one was on the API. You told in the initial remarks that API segment was impacted during 4Q. So can you please substantiate on that? How much was the impact during 4Q on the API segment?
So quite a lot of dispatches were lined up towards the end of the March.
Okay.
And that's the time when this COVID situation got escalated, and we had to suspend the operations. So we couldn't dispatch the inventory which was there in the system. Now, as we plan to open up the plant very shortly in next few days, we will be starting to dispatch that inventory.
Okay, so that impact would be partially or fully reversed in this quarter if the inventory dispatch was the major issue, right? Is my understanding correct?
Yeah, so the inventory will be dispatched immediately, but then we also lost the production for 2 months. But we have the capacities available. We have the demand there in the market. So we will be making our all out efforts to recover the gap what we have.
Okay. And one more thing on drug discovery business. So what I got is that your EBITDA margins improved substantially because EBITDA improved more than the sales improved. That was partially because of pricing as well. So what will be the trend going forward? Do you expect similar trend to continue and pricing to improve further? And the growth to continue?
Yes, that is what I said earlier also. The pricing trend is continuing, and the capacity utilization also is as high as it was earlier.
Got it. And so why was the pharma segment asset went up this time?
Pharma segment.
Sorry, I missed your question.
Well, the generic has performed well, and our radiopharmaceuticals and allergy business performed well, and our contract manufacturing of sterile injectables performed well. I think the only which was affected is the API business.
I was saying pharma segment assets went up, not the sales.
No, we're not on this question.
So that again is largely on account of the foreign exchange translation, given the sharp increase in there. And there was also some bit of increase in working capital on account of inventory, where in the previous year our inventory had come down, and we actually had to build it back up to ensure we didn't have any backlogs for customer orders.
Okay.
And at the end of the March, actually, there was some logistic disturbance also because sudden announcement of this thing. Some dispatches were also held up.
That's right. Especially in the API business and others, we had some inventory build up on account of that.
Dispatches were held up for a few days, and that was almost.
Yeah.
Hello.
Yes, sir. Please proceed.
Yes, sir. So you were saying on the pharma asset that I got their inventory and gone up because of dispatches, as well as that last year the inventory was pretty low. So it was more because of the forex translation inventory. That's correct, right?
That's right.
Okay. And so one last question, if I may ask, that so in LSI business, are people also looking at the outside China benefit?
Yeah, overall, I think in all our businesses, we are seeing some benefit of sentiments. People want to move out of China. But there is not such big movement. But yes, there are sentiments which are in favor of India.
Okay. All right. Thank you, sir. Thank you.
Thank you. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Hello, sir. Thank you very much for the opportunity. I just wanted to understand in terms of your EBITDA margin, 23% EBITDA margin we reported this quarter. So what sort of sustainable and aspirational EBITDA margin we are looking at going forward?
So we cannot comment because of the uncertain situation.
Mm-hmm.
We can't comment on the future EBITDA margins, right?
But over the medium term, it may not be the short-term hiccups that you are facing right now, but over the medium term, what sort of aspirational margin we might be looking at? Because our drug discovery is doing quite well, right? Higher EBITDA.
Our businesses are strong. In the medium term, we are quite confident to maintain a reasonably good margin.
Okay, fair enough. That's it from me.
Thank you. The next question is from the line of Rahul Veera from the Bracket. Please go ahead.
Hi, sir. Just wanted to understand, since we are launching the RubyFill in Europe, what is the market size there and how long will we take there to break even?
For the RubyFill in the Europe, as of now, the market, there is quite a lot of pent-up demand. It's an unmet need, but the market is to be developed because the product commercially is not available.
Okay. So, sir, what are the expectations from us? Like, how much investments will be required? Like, how long will it take to break even there? And what will be the key markets within Europe?
So the investment is required only in terms of our overall capacity to produce. It's not much of the investment on that front. We plan to launch the product in the Europe market commercially this year. And once we launch the product, we will be aggressively doing sales and business development activities, and we will be developing the market. So we are already in touch with a lot of hospitals and the imaging centers there, and we see quite a strong demand over there.
First, we hope to launch in Germany and Switzerland, and then other countries.
Okay. And in terms of pricing, sir, what will be the gap? Because Europe is largely price control based healthcare infrastructure. So how are we going about that?
There is a for this product benefit in this test procedure. So I think there is no control on pricing as such. So new reimbursement norms have to be fixed in Europe for this procedure, since this procedure is not existing today.
Oh, okay. Got it.
And Rahul, to your earlier question on the finance cost, the lease capitalization was about 9 odd crores in a number. And also the full year this year, we had the 2019 bonds for the full year. Whereas the prior year, they were there only for the 1 month, so that's the reason for the big difference in the number.
Oh, okay. Got it, sir. Fair point. Yeah. Thank you, sir.
Sure.
Thank you. A reminder to the participants, anyone wishing to ask a question, please press star 1. The next question is from the line of Sajal Kapoor, an investor. Please go ahead.
Oh, hi. Thanks for the follow-up. So I've got a question on our CDMO business. So this 30% incremental capacity will be potentially generating a revenue of $30 million. So that's good. I'm just trying to understand. So we have just added more lines to the same. So we are still doing those sterile fill finish and lyophilization, that type of work. And we are not into any biologics as such, right?
No, we manufacture biologics and vaccines and all that. We do it there also.
No, in terms of the incremental capex.
No, there is incremental capex which we implemented for one lyophilizer which we commissioned last year. So we have commissioned one lyophilizer. Plus we have increased the number of shifts of operations in US. From 2 shift to 3 shift operations, both our facilities. That has given incremental capacity in all 7 days.
Right. And for the biologics, can you just help us remind again, is that all mammalian or microbial or both?
No, we do fill and finish. We don't do manufacture of APIs.
Okay, right.
We do fill and finish.
Yeah,
Fill and finish, we do all biologicals, vaccines, small molecules, we do everything.
But not the drug substance.
Not the drug substance. Sorry.
Correct. Okay. Thank you, sir. All the very best. Thank you.
Thank you. We'll move on to the next question. That is from the line of Mr. Ankur Jain, an individual investor. Please go ahead.
Hello. So my query is, the revenue looks flat in terms of INR, but on constant currency basis, it seems to have dropped by 5-6% because the currency has also dropped. Whether we compare on quarter-to-quarter basis or whether we compare on year-to-year basis. So what is the reason of the same? And the second question is, what is our hedging policy?
So yes, so currency has obviously the dollar has appreciated over last year's quarter. So that is in the numbers. In terms of our hedging policy, we have decided as a policy, one, we are fairly hedged from a natural perspective. Our exports, imports, there's not much of a difference. Whatever little one there is that we don't usually hedge, because usually we end up turning out to be even out with or without the hedge. So as a policy, we decide not to hedge whatever the small amount of net exposure we have.
So do we hedge our debts because of the currency fluctuation? Our debt has also debt in INR has increased by around 200-300 crore.
See, our major debt is in US dollars. And major income, revenues and income also is in US dollars in pharma business. Major debt of about $400 million, which is in US dollars. So we are fairly hedged, naturally hedged there.
Naturally hedged.
Okay.
We need to cover that.
Okay. And what was the reason for drop in the revenue? Because in constant currency there is a drop.
Yeah, if you see the average foreign exchange is around 69 rupees. If I'm not wrong.
Correct. 69. Yeah, 69 versus 75.
For the whole year.
Yes, for the whole year. Yes. For the whole year, weighted average would be about 72 something. The year end was 75, and the previous year was about 69.
Full year was how much? Hello.
About 72.
72.
Hello, Uncle.
Yeah.
Are you done with the question?
Yes. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, please press star and 1. We'll take the next question from the line of Sankara from Jubilant. Please go ahead. Sankara, your line is in the talk mode. Please go ahead.
There's no question?
So the person has not responded. Ladies and gentlemen, that is the last question. I now hand the conference over to Mr. Vineet Nair for his closing comments.
Yeah, I would like to thank all of you for joining on this conference call. I wish all of you and your families a good health, and please stay safe. If you have any further questions and anything want to clarifications, Alok Dash is available. Please call him and discuss with him. Thank you.
Thank you. Ladies and gentlemen, on behalf of Jubilant Life Sciences, that concludes this conference call. Thank you for joining us, and you may now disconnect your line. Thank you.
Playback is complete.